Hey gang, this is Greg Cooper with Black Belt Trading. I am here with my good friend and instructor Rodrigo Costa of Gracie Baja Seminole, and we're going to do a series of short videos just explaining the absolute basics of stock trading. It could be applied to anything that's exchange traded. So it's all the basics of technical analysis. And the first thing I want to do, Rodrigo, is I'm going to pull up a chart on Optima, and then we're going to talk through, so we're going to build up kind of from the ground. So where the hell are you? Okay, we're going to go here and we're going to pull Optima up. You see the chart?
Yes, I see.
Okay, perfect. This is SPY, which is one of the most popular S&P 500 ETFs or exchange traded funds that tracks the performance of the S&P 500 index. So what we're going to do is start from the beginning. Eventually, we'll kind of go through everything on this, and so you understand exactly what you're looking at instead of it being just a confusing mess of a million different things. So first thing to look at is we're going to pull up basic bar chart, and we're going to look at the same thing. We're going to look at SPY, but we're going to zoom into this. And this is one of the two most common ways of illustrating, stock price movement over time. Now, in a bar chart, the height of the bar from top to bottom, like this bottom bit is the low of the day. Like we're on daily price bars now, but we could be on anything from years or months all the way down to microseconds. So it doesn't matter. The price action is fractal. So here's the low, here is the high for the day. This little tick mark on the left is the open, and this little tick mark on the right is the closing
Okay.
price. Does that make sense?
Yeah, yes.
Okay. And what we're seeing here, the way it's displaying it right now is red bars are down days. So you can see that, the open tick is higher than the closing tick. And then up days are blue here. And there's many different ways to show this, but your open was lower than your close. So it was an up day.
So which one exactly is the opening? The bottom one or the top line?
The one on the left.
Okay, I see.
Okay. So the one on the left, it could be in an up day, it's going to be the bottom one,
Yeah, I see.
and the close is going to be on the top. But in a down day, it's going to be the top one, and the close is going to be on the right.
I got you.
Okay, because time is on your x-axis. You're going through time, as you look at the bottom of the chart, and these are all days and whatnot. Like this is June 9th, so big down day, big down day. I mean, your price went down a little bit, but it traded way down and then came back up to close higher. So that's something else that, we'll talk about a lot more later. But it's like when you have, like, there was a lot of commitment behind this. The price opened high and closed really low towards the low of the bar versus this bar where price opened about at the open of the prior day. Those were really close, traded way down, but it came right back up, came quite a bit up to close at a higher level.
Okay.
Okay, so the consensus was very negative here because high near the top, low near the close. Not as much commitment here because even though you went down way low, you came right back up. So that indicated the people that wanted to, sell were outweighed by the people that wanted to buy. So the bears were, kind of pushed back quite a bit by the bulls, so to speak. So somebody bearish thinks that price is going down. Somebody bullish thinks price is going up. Good?
Perfect. Yes. I got it.
Beautiful. Let me see if there's something else in here that I can mess with to make this more interesting. No, I think that's okay. So, all right, now what we're going to do, the next most popular way of showing price action is, That's a bar chart. We want to go to candlesticks. Okay. So candlesticks work the same way, except you've got like a fat body, and the fat body, the body of the candle indicates the open and closing price. So in this
Okay.
case, this is a pretty simple version. So the white ones are, indicate an up day, and the black ones indicate a down day.
Okay.
Okay. And you can show this, you can do it like green and red, which is maybe a bit more common, but you see the same, same kind of thing here. So this is the same day, June 5th. You had the open was 7:52, the close was 7:37, and your high and your low were just a little bit beyond each of those. And then here you can see the other bar that I mean, the candle, the day that I was talking about, where you had the difference between the open and the close wasn't that great, but your wicks, the lines on top and bottom indicate the top, the high and the low for the day or
I
whatever
see.
period you're looking at. And that indicates, again, not as much commitment to the downside. Make
Okay.
sense?
Yes, yes, it does.
Okay. Now and since we're on candlesticks, I'll point out a couple of things here. It's a little more than what I wanted to go through. But you see this where you've got like a cross, it's
Yep.
just a line with a cross. This means
Yes,
that your
yes.
open and your close happen at about the same level. So and it's
Happening
you
about what?
about you open and close at almost the same price. Your open was
I see.
733, um, 733, 81. Your close 733.58,
I
and
got
this
you.
one looks even tighter. Open 728.95, close 728.99, 4 cent difference. So what this typically indicates is indecision between market participants. Is they're not, neither bulls nor bears is winning the battle, so to speak. It's just kind of balanced. People wanting to buy, people wanting to sell. It's kind of balanced if the price is not moving. If you're not creating an actual candle. Questions?
No, so far I got it.
You got it? Okay.
Yes. Well, so far.
All right, that's cool. Let's see. Let's see. I know there's something up here. Anyway, my chart. I swear I know there's a way to change the way this looks, but anyway, um, but you got the same thing. So these are daily bars, and you can look at the same thing. Weekly bars. All the way. I think this will go out to yearly.
Okay.
So, so it works this pretty much the same way, whatever time frame that you're looking at.
Perfect.
So that's what it looks like on this. And let me just flip up. All right, this is Think or Swim, which used to be TD Ameritrade, but Schwab bought it. You see this now, different screen?
Yes, I do.
Okay, so you got the same thing here. I like candles, but here they're showing it like red and green. So green is up and red is down. And you've got the
Okay,
same,
same thing.
yeah, same thing. Like here's the doji, which is what that type of candle is, where it's like looks like a plus sign. So,
Yes, yes.
okay, so you've got the same kind of thing.
And what
Uh,
about those charts underneath here?
there's a lot to that, and we'll have to go. I'll talk about this one. This is volume.
Yeah, that's what I'm
Okay.
talking about. So that's volume. Okay.
Okay, so this is how much, something is trading in a given day. And
Okay.
generally kind of the rule here is the more volume, the more commitment there is behind, whatever price action is taking place. So this looks
Okay.
like the highest bar on the chart right now. So, and it was a big down day. All right.
Okay.
So it means a lot of people were selling on that day because
I got you. I
you
got
got,
you.
a lot more here. Now
I
this
understand.
is not quite as high, but a big up day, which
A lot of
corresponds to
people
this
buy.
candle. So you see here, volume is kind of you know, tapered off, which we're in the middle of the summer, and there's an old saying like sell in May and go away. A lot of people are on vacation, so not as many people are, focused on the market as would, otherwise be happening during the, rest of the year. But a lot of people, fewer people are focusing on things. So, and you kind of see like volumes pretty low. Even though this was an uptrend up through here, your volume's pretty low compared to these peaks.
Yeah, I
Okay.
see.
And it spiked up a little bit on the big, this big drop, and, came back up a little here, which was a fairly big day. But now it's just kind of flat at the moment and not a whole lot of volume. This one's tiny because this is today, and the market just opened, a little over an hour ago.
Okay.
Okay.
Yeah. Just give me 1 second. 1 second.
Okay.
Look at that big boy right there. Go ahead.
Okay.
Apologize.
No worries. All right. So, this is what I wanted to cover today. You got any other questions for me at the moment?
No, I guess that was a pretty good explanation. I think I got a little bit of the candles. I got an idea, the
Okay.
colors and the ups and downs and the volume as well. But yeah, I got that part. I think so.
Okay, good. Well, there's a lot more to go through, and we'll do that bit by bit, and kind of put it together a piece at a time. And before you know it, you'll understand what all the rest of this stuff means and be able to make
Oh,
decisions from it.
awesome, man. Yeah, thank you so much for the explanation. That was a good explanation because, I'm a completely beginner, white belt in this trading. Just trying to evolve a little bit, maybe get a stripe or two, so I can.
Absolutely, absolutely. I mean,
So
that's the thing. It's like you don't learn this stuff in school, and you don't even learn
yes,
this stuff in business school. You got
I
to
wish you
really,
all did. You know what I mean? Yeah, I
you
wish
got
you
to
all
seek it
did.
out.
Yeah, but I'm glad you're gonna teach me a little bit. I'm excited to learn
Cool,
and and, and
cool.
start doing tradings. Yeah, thank you so much, Greg. I appreciate it.
Hey, Rodrigo, no worries. Thank you for the training yesterday. Appreciate it.
No, no problem, and I can't wait for the next session.
Absolutely. All righty,
All right.
man. Have a great
Thank you
day.
so much. Yeah, you too as well. Thank you, Greg. I appreciate it. I'll talk to you soon.
Okay, take care.
Thank
Bye.
you. Bye bye. Sorry, man. See that monster for your window? No, I didn't.